I don't know if it's just me, but looking at data on the Toronto Real Estate Board right now is extremely frustrating because none of it really makes much contextual sense, at least to me, somebody trying to analyze what's actually happening. Part of that is because we're comparing this year, 2023, to 2022. And 2022 was an extremely volatile year. It was an outlier. And guess what? 2021 was also an outlier. And guess what? 2020 was also an outlier. So I decided I'm going to come up with my own solution to kind of figure out what does the seasonality look like and what is our current market doing relative to seasonality. My solution to that was to look at the last 15 years of data for prices, active listings, new listings, and what we're selling in order to decide whether or not 2023 is actually trending to seasonal norms or not. Hi, my name is Vas, and I'm a real estate broker right here in the city of Toronto, where I help investors and families navigate the insanity of our real estate market. So before we dive into the videos and all the charts and the data, I'm just going to give you a bit of a backstory to show you why this video is currently happening. TREB is very tight with the information they release, and it's very difficult for us, realtors, brokers, what have you, to actually analyze data in terms of what's happening. The data is limited, so we'll have to come up with our own manual ways in terms of how to dissect it and figure out what's happening live as it's happening. This video is inspired by the fact that there are different reports that come out from different agencies, whether it's the Toronto Real Estate Board or other realtors. And a lot of it I find confusing sometimes because we have no context to compare. So for example, if you're telling me that prices are going up between May and June, is that normal behavior for May and June, or is it just in 2023 that they're going up? And if you're comparing this time last year in 2022, is that the year to compare to? Does that make sense? Because from what I remember, 2022 was a very volatile year for all of us. So it's probably not a very good idea to compare to an outlier year. So with that, I took the last 15 years of data that are available to me from the Toronto Real Estate Board, and I developed my own seasonality charts. And with these seasonality charts, now I have an idea of what the market is actually supposed to do based on 15 years of historic data where it smooths out any volatility or any outlier years. And I think this is probably the most intellectually honest way to talk about stats and to talk about what the market is actually doing, comparing it to seasonal norms. Now, this is by no way a perfect way to evaluate the market, so I am looking for feedback. If you think there's a better way or if there's something I can improve, please let me know in the comments or email me. Let's get into it. I'm going to show you 4 or 5 different graphs and let's talk about them. I'm going to tell you what I think is happening based on seasonal norms and what the current market is doing. So let's start off with this market stats at a glance, which is distributed by the Toronto Real Estate Board. And this is kind of what started this. This is what I don't like seeing because to me, the average person is going to glance at this. I guess it is at a glance, and it's probably going to leave them confused, or maybe they're going to be misled because maybe they're thinking the market's doing well, prices are going up. So let's take a look. It says that average selling prices are higher by 3.2% relative to June of 2022. Fine. Home sales are also up by 16% since June of 2022. And listings are lower than June of 2022. Now, to me, again, I find this extremely misleading because 2022 was an outlier year where we had a completely irrational behavior it was rational but irrational relative to the norm, because we had some of our fastest growing interest rate increases, which completely changed the market very fast. To visually explain what I'm talking about, this black line is our seasonality in terms of price increases. This is typically how the market behaves. And this green line right here is 2022. This is how fast prices dropped starting February of 2022. So to compare to a year that was like this, it was an underperformer year. Obviously, anything in 2023 is going to look really good. But even the years prior to 2022, they were extremely different. We had the pandemic. We were going through different lockdowns. Everything was extremely challenged, and it was not behaving like years prior. So this is why comparing to the last few years, to me personally, it doesn't make much sense. We have to compare to a seasonal norm. While I was putting this information together, I did find this interesting. I thought I would share it with you. Between 2008 to 2014, on average, the average price in the Toronto real estate market, the Greater Toronto area, went up by 6% for all asset classes. Since 2015, it's been going up by 10% on average per year. Start with pricing. So this black line represents seasonal price increases. So for example, over the last 15 years, between January and May, prices will go up on average 12.6%, and then they'll drop to a net year-to-date 8.18% in August, and then they'll go back up again, and then basically they'll settle at about 9%. But this is the seasonal pricing trajectory of the real estate market in the Greater Toronto area. Now, here's what happened in 2023, which is the red line. Effectively, we were going somewhat to seasonal trends in the beginning of the year, and then starting March, April, and May, we completely overshot seasonal norms. So for example, by May, we should have been up by 12.61%. In terms of pricing, we were up close to 17%, 16.55. So obviously, pricing outperformed. Now, what's happened with June, we see this drastic drop, which is actually a much steeper drop than the relative drop we're supposed to see. So technically, we're supposed to be seeing roughly a 1% drop in price between May and June. And what we're actually seeing is close to 3% price drop between May and June. This is likely going to continue happening into the summer, and we're going to see whether or not it's actually going to go below seasonal norms or if it's going to normalize towards the fall and then start following the norms. My personal theory as to why prices have been where they have been is because of active listings and new listings, which we're going to get to in a minute. But as you can see, our active listings, which is 2023, relative to where active listings are in these months, were well below where we should be. So to the tune of close to 30 to 40%. So for example, in May, we should have had roughly 20,000 active listings, whereas we had maybe 12,000. So that is a substantial amount of inventory that we did not have on the market. I think this is partly because a lot of people who would have been upsizers, that would have been looking to move up in their homes, maybe go from a townhouse to a detached or from a detached to a bigger detached, usually younger families, these people are electing not to move because they probably have a cheap or relatively cheap mortgage that's been locked up and they're in the middle of their term. They don't want to break that mortgage to go into a more expensive home and then take on a mortgage at 6 or 5.5% like the mortgages were recently. Here's where this leaves us currently. So the red line here shows us seasonal listings and sales, which is the green line. So for example, the red line is seasonality over the last 15 years. In a typical year, in the month of May, we would have had roughly 18,000 new listings. What we had actually is roughly just over 15,000 and actually started improving in May. Before that, in April, we had, call it just under 12,000 new listings, where typically we have about 17,000 new listings. So as you can see, this low inventory is what, in my opinion, drove prices to be stable and in fact run up a little bit in April and May because we just had no new listings relative to seasonal norms. Now, what's interesting is relative to how many listings we usually sell during the year, we were actually somewhat on trend. So we were selling or we were absorbing less than we typically do, but as you can see, the spread here is a lot less than the spread we're seeing between new listings. So basically what this is telling me is relative to the listings that we did have in the market, despite them being very low, we were actually absorbing or buying up more than we usually do. In other words, this created what would be referred to as a seller's market. So for example, out of every 10 listings that come on the market, 7 will get sold. That's what's been happening right now, which would be considered the seller's market. Whereas in a normal market or a seasonal market, out of every 10 listings that come, maybe 5 or 6 would be sold that come on the market. So that makes it more of a balanced market. So right now it was an extreme seller's market. However, what's interesting to see or what's important to look at, typically going into the summer, new listings trended down. What happened this June of 2023, new listings actually went up. And we're actually now where we should be in listings. But what's going to be important to see is whether or not this line is actually going to continue going up as we feel that there's more and more pressure on sellers to list with rising interest rate costs and people being afraid of the new mortgage renewals they're going to have to take on, potentially thinking about downsizing or, getting rid of their debts, moving into something cheaper and things of that nature. The other trend that's developing also is that we're actually absorbing less listings. So as you can see, in June, we were trending somewhat to seasonal norms, but less people were buying relative to where we should be, especially relative to where inventory is. So that means more and more listings are sitting unsold on the market going into the summer, more so than usually. I hope you found this video useful. Again, it's a work in progress. I'm still kind of figuring out how to better display this information. I know it can be difficult to digest sometimes, but I think as we start building up a trend line relative to seasonal norms, it's going to become more and more clear. If you found this useful, please like the video and subscribe to the channel. This gives me the feedback I need, what kind of content you want to see. And if you have any suggestions or feedback, please email me or text me, or if you have real estate questions as well in terms of the market, what to do, whether you should sell, whether you should buy. I think the charts kind of speak for themselves. We are entering what I feel is going to be a decent buyer's market. And I think Whether or not it's going to get better for buyers is going to be determined by interest rates and how fast sellers react to that. And for sellers, obviously, you have to manage expectations because prices are fluid and they are changing, and going to the summer, prices will continue to go down as we usually see based on seasonality. And like always, thank you so much for watching, and I'll see you in the next one.